What's going on, people? It's GBP baby. Welcome to another video. It's currently 1:03 a.m. on Thursday the 6th of July. We have DXY in front of us right now, as you can see, and yeah, we've had quite a nice day today. Traded higher. We traded into the anticipated breaker, so I anticipated this breaker getting traded too because I wanted to see this high get ran, but you can see that we traded quite bullishly through it, and now we've kind of found some kind of support. So now that the fact that we traded through it and never actually turned over, the fact we traded through it and never actually turned away from the breaker now allows me to anticipate support being found within it. So what I'm saying is that if we never traded through the breaker, I would expect us to have traded lower, but that's not what happened. We traded through it, above it, and now I want to see if it shows support. If it shows support, then I do have some higher time frame targets, such as this swing high here, but I'm going to go to the weekly really quickly just to show you what I have marked out on my charts. So you can see this is the week so far, quite bullish, and we're trading right through this wick, and I came over to this candle specifically. This is a bearish order block. Why? Because it's the last up candle before a break in market structure. Not in the break in market structure, sorry, a change in the state of delivery. Once this candle closed, this makes this, that close in here makes this the bearish order block. So what I've done is I've marked out the 50% level of that, that's in red. And I've also marked out buy side liquidity resting above this swing high here. So I'm going to jump down to the daily, and we can have a better look. And you'll see there's also a fair value gap all the way from the 24th of May, and I've drawn that right out. Why have I drawn that right out? Well, you can see we traded up, and down, and then touched it and left it again. So although this fair value gap has been traded through multiple times, I have marked it out because I do believe price is going to find resistance if we are to go into this buy side liquidity and reach this level. This is what you call a balanced price range because we've traded through it on both on the buy side, sell side, buy side, sell side. So that means when price trades to it, I can anticipate some kind of selling to occur. Although also this does look like a nice rejection block, to be honest. I've also marked out the buy side liquidity resting above this high, and this high act as relative equal highs. So there's reason for price to want to draw up to that. So yeah, this is that's pretty much everything when it comes to dollar. Again, if we never traded through the breaker, then I'd still have my bias of wanting to look for lower dollar. But the fact that we traded through it aggressively too, as you can see, now my bias has changed, and I'd like to see support found here, and then I can start to expect higher prices on dollar. You can see that there's a nice volume imbalance here. There's no trading, which is right at the buy side liquidity. So I'm also going to mark that out as a target. And I'm going to make that yellow. So there's a lot of liquidity resting up here is what I'm saying. And yeah, I can pretty much anticipate price to want to start to draw into this area. But we'll go over to Euro. This video, I'm not actually going to take a look at GBP because, as per usual, she's misbehaving, so to speak. So let me just get my daily dividers sorted out for Euro, and I'll be right with you. So Euro has been moving lower pretty much all week, and you can see how we've traded back into this bullish order block, taken out sell stops here, and we've also had quite an aggressive move lower today specifically. Now, similar to what I did with dollar, I'm going to note this bullish order block, and I'm going to mark out the 50% level, because you got to remember that these PD arrays, when it comes to order blocks and fair value gaps, etc., they are graded in terms of the levels that are referred to. So 0.8546, and you can see how price has actually disrespected it. So if price was to close or to stay above this 50% level, the likelihood of us moving lower would have been less, but you can see we traded through it. And now with my bias of higher dollar as well, I'd like to see these relative equal lows on Euro start to get targeted. So I'm going to mark out this sell side liquidity resting here, like so. And also, if we go to the daily, you'll see that I have this marked out, which is a bullish order block. So I am seeing this as a target in terms of sell side, but there's also what you call a implied fair value gap here. So I'm going to mark that out first. An implied fair value gap, I'll show you exactly how it forms. It'll be the midpoint of this wick, which is 108.084. let's make these orange lines, and then it'll be the midpoint of this wick as well, which is 1.08179. Oops. I am very tired, guys, not gonna lie. I had a very busy day today. And what this is an implied fair value gap. So although it's not visibly there, this would count as a fair value gap. So it's possible for price to want to draw down into this when it starts to attack this sell side. If I drop down to the 1 hour, we can have a better look. And you can see we started to consolidate at the 50% level of that 4 hour bearish order block. So it's important to recognize how price treats these levels, because it shows, you know, it shows that there's clearly either accumulation going on during this consolidation. So overall tomorrow, as in Thursday, I'm expecting price to want to fall lower, take out this outside liquidity, and potentially reach down into this implied fair value gap. And with DXY, as I just said, if we find support on this anticipated breaker, then I'd like to think that we can start to stretch higher and start to reach for this buy side liquidity resting above this swing high made on Friday at 7 AM. And yeah, that's pretty much everything, to be honest. Tomorrow there is a big news release. Let me quickly find out what that is. Yeah, so today we have high impact news releases on the USD. We have balance of trade, employment change, jobless claims, initial jobless claims, PMI. So there's a lot of high impact news releases basically tomorrow, which is why I am anticipating quite a lot of volatility. But it is important to remember that we have had a holiday this week, and yeah, in terms of probability in general, you can just see that the markets are quite, you know, they're not in the best conditions recently. Very choppy, very back and forth, as you can, especially this week, which is why it's best to be careful. But I guess we'll see what happens tomorrow. But yeah, that's everything, guys. This has been GBP Baby, and I'll catch you in the next one. Peace.